What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw another very bullish day in the stock market and we're finally starting to see the small caps taking the lead, which is exactly what we expected to see. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY going up 0.17% and closing at yet again another brand new all-time high, so we still see very bullish price action. Now there is a lot to talk about with a potential pullback at these levels because we did hit our price target at 460 and we did print a hanging man candle. So that tells us there was a lot of dip buying because you don't print a candlestick with a wick this big to the downside without buyers of the dip. But it does mean we're getting a little bit more of a concerning look with the buying because we're starting to see the bulls getting tired. If you're going to see the bulls getting tired, it's usually going to be at one of these price targets because that's when the bulls are basically ready to take profit. And now it's only really the FOMO crew that's just now catching on that the stock market is looking bullish that's trying to buy in at these levels. Just a very easy IQ test. If you were too scared to buy down here, then why are you buying up here? If you're buying up here and you weren't buying down here, then you're failing that IQ test and you want to buy low and sell high. So this is definitely levels that you're trying to sell at, you're trying to lock in those profits, and you're trying to wait for a pullback. That doesn't mean we have to pull back, but if we're going to pull back, it's going to happen very soon. So whether or not we start pulling back as soon as tomorrow, or we don't pull back until next week, I'm much more comfortable just waiting for a pullback at these levels. We're getting a lot of evidence that the bulls are getting tired and we're due for that pullback. Now in the event we get a pullback, the most obvious levels to pull back to would be 453, 450 or 448. So these are the three support levels that I would pay closest attention to. And if you have patience, you would just wait for one of these levels to start buying. If you don't have patience and you think we're going higher, by all means, go ahead and buy into this market. And we do have another price target up there at 465. Remember, anytime you're looking at my price targets, you want to see two closes over one level before you get overly bullish on the next level. So technically speaking, this is only day one at 460. So you need to see a follow through day if you're looking at 465. Otherwise, look for that potential pullback opportunity that's going to take us back down to either 453 or about 450. And if we lose those support levels, keep looking for the next critical support lower. By far, the most critical support will be the 50 EMA, which is going to be right around 445. And I don't actually expect to touch the 50 EMA. More than likely, we're going to find support at 448 or higher, so don't bother looking at too many of these gaps below because they're not likely going to get filled until the next stock market correction. We still have more room in this bull rally, so it is a buy the dip market and we do have the full bull trend. So in the event we pull back to any of these support levels, that's where you want to start buying for the trip to the new all-time highs. This is time to be locking in profits and staying disciplined and not chasing a move that you missed. So while I am bullish, I do expect to see a pullback in the very near future, and there will be a lot of bull traps, so don't expect it to just happen in a very obvious manner. I wouldn't be surprised for the market to just turn around sideways and chew up and spit out both the bears and the bulls trying to buy weekly call options or trying to buy weekly put options. So just because we chop around sideways doesn't mean it's a buying opportunity or doesn't mean that we have to get a sharp pullback, so it's going to be a very whipsawing and tricky market. Just understand the more likely probability is that we're getting a pullback and plan accordingly. Jumping over to the NASDAQ 100 triple Qs, we were up 0.34% today and we didn't quite get to that price target at 388, but we are very close to hitting that level. Was that close enough and we're due for a pullback, or are we actually going to hit that level? We should know that as soon as tomorrow. Just like with SPY, I expect to see pullbacks once we get to these targets. And I think with how close we close to that target, it's good enough for me. And I'm not trying to milk a 50-cent move for the probability of missing out on a 1 to 3% drawdown. So the strongest support levels on the triple Qs will be 382 and 378. And I don't really expect to go much lower than 378. In the event that we do, we have another very strong support level right around 373. So those are your three critical support levels that you're looking to buy off of if we do start to see that pullback. The gap down here at 360 is not likely getting filled until the next stock market correction, and we're not going through a correction at this time. That's my opinion. Everything's subject to change if we see the price action slicing through support. So watch that critical resistance at 388. And if we start breaking above that level, you need to see two closes above that level. And then we could start to see the triple Q start making a move towards 400. Remember, we do have the full bull trend, so you want to buy the dip because you're in a strong bull market and you don't want to get shooken out just because we're getting a pullback. You're either holding your longs or you're taking profits here and getting ready to buy the dip. In the Dow Jones, we were up 0.25% today, getting rejected right at a price target at 360 and closing just below that level. So you're seeing a trend here. We're hitting price targets on SPY, the triple Qs, and the Dow Jones, which is the perfect time to see a pullback. When you're getting to price targets across the board, that's the universal sell signal for the disciplined bulls to take profits and get ready to buy the dip. So don't be surprised if we start to see dips from these levels. And on the Dow Jones, you're looking for support at 356 and 355. And below that, the strong support level is right around 351. And while I don't expect to go that low, that will be the level I don't expect to break down below. If we start breaking out above 360, the next price target's up there at 365. And remember, we do have the full bull trend, so you do want to buy the dip. In the Russell 2000, we had a very bullish day, going up 2.59% today. And we saw this move coming from a mile away. On the Stocks Channel Discord, we've been loading up on small caps, and I even talked about why we were doing this in yesterday's video. If you're not sure why the small caps did so well today, just watch yesterday's video or watch any video I did from last week, because we did see this move coming from a mile away. We went up on huge volume today, so we know the bulls are behind this move, and this is not just a fluke. This is to be expected, and we're going to see the small caps continue to outperform the market for the whole month of November. This was our bullish confirmation breakout level at 232, and we almost hit the next resistance up there at 234.4. So this is an extremely bullish candle, backed up with high volume, and we have the very strong bull trend with the very strong bullish price action. So remember, on a breakout above the next resistance at 234.4, our price target is up here at 238.5. We can still go higher than that, but let's take it day by day, and that's the next price target we want to pay attention to. So with the strong bull trend and the strong bullish breakout, we're either going to continue this impulsive rally straight to the price target, or we're going to pull back, bounce off the breakout level, and then get up there to that price target. So you do want to buy the dip in the Russell 2000 if you get the opportunity. If for some reason we come even lower, that's even better, because we're still more than likely getting to that price target. So watch these support levels at 232, 229, and right around 227. I don't think we'll go to 227, but if we did, I would label it a screaming buy, and I would be buying hand over fist, because the Russell 2000 is looking very bullish at this time. So follow the trend and follow the price action, because if you're staying objective, you can't look at this chart and see anything other than a very bullish stock. The Russell 2000 is here to stay, and it looks like it's going to break out to brand new all-time highs. On the Arkk ETF, we were up 3.17% today, and again, we see a very bullish looking candle, and I do acknowledge that a lot of this is because Tesla stock. So I wouldn't get overly bullish on Arkk stock, because it could come down quite a bit when we do see a cool down in Tesla. But if we're following the price action in the trend, we can see this is incredibly bullish, and we're even possibly forming an inverse head and shoulders here. We have that left shoulder, we have the head already in formation, and now we're possibly forming a right shoulder, which would be a bullish pattern in the long term, but it does mean we're due for a pullback. So if this is going to be an inverse head and shoulders, we would expect to see a pullback from this level, a bounce off support, and then break resistance at the next go around. So look for strong resistance right around 125 to 126, and a rejection at that level, we would have a buying opportunity at 122 to 123, or the support level at 120. The critical support is down here right around 118, which is our 50 EMA. We have bullish price action, and we are breaking through some critical resistance in the Arkk ETF, and we are going up on increasing volume. So the price action is bullish, and we're very close to having the full bull trend. So it does look like the Arkk ETF is going back into a bull market in the very near future. Look for that breakdown below 118 to invalidate this, because that means we're likely going back down to close the gap at 113. On the VIX, we were slightly up today, going up 0.92%, which is exactly what we would expect to see, because we are at brand new all-time highs and we are reaching very critical price targets. So even though the S&P 500 went higher today, we also saw the VIX going higher as well. And there's just a lot of people that are uneasy about these prices going into FOMC. So we're seeing a little bit of fear creeping into the market, even though we have bullish price action. However, as long as the VIX is below 18.2, you want to buy the dip. And if you see the VIX spiking out and closing above 20, then you're looking for a deeper pullback that could turn into a stock market correction. So right now we see normal fear in the market, but we still see a bullish VIX with the level below 18.2. Look for the VIX to trend down towards 14 as we break out to new all-time highs. And remember, if the VIX is spiking and staying below 20, that is still completely normal price action, and you still want to try to buy the dip in the strong bull market. On Bitcoin, we're currently down about 1.2%, and we see Bitcoin trading just above our support trend line right around 60,500. We're losing the full bull trend, but we're very close to regaining it if we can get a strong bounce off of this level. We could see Bitcoin going into a little bit of a sideways consolidation and possibly form a triangle here, but if you get that bullish breakout above 63,600, you have to get a lot more bullish on Bitcoin. We have a strong bull trend, and we already know Bitcoin is very likely going to break out to another brand new all-time high. So the trend is your friend until the end, and right now Bitcoin is still incredibly bullish. So look for that break above 63,600 and that retest at 67,000. And above that, we're looking for our price target up there at 75,000. As long as Bitcoin is staying above 59,000, I think you need to stay bullish. And if we break down below about 55,000, then you need to be a lot more cautious of a longer consolidation that could bring Bitcoin into a little bit of a correction period. But right now, Bitcoin is still bullish, and I think you need to buy the dip as long as it's above about 59,000. On Amazon stock, we were down 1.61% today, and we see Amazon still looking very volatile, but still holding up above that critical support level at 33.11. Remember, you can stay bullish on Amazon as long as it's above 33.11, but if we break down below that level, it means we will have a confirmed double top, which means Amazon is more than likely coming back down to 31.85 or 31.36. As long as we hold up above 33.11, there is no confirmed double top, and we could come up here to close this gap at 33.85. We need to break above the critical resistance at 34.52 to start running up there to close the gap at 35.80. So we're bullish on Amazon above 33.11 to eventually close the gap at 35.80, and we're a lot more bearish on Amazon below 33.11 to go down there towards support at 31.85 or 31.36. So follow the price action, because at this level, you only have one critical level you need to pay attention to, and it's a breakdown below 33.11. On Tesla stock, we were up about 8.5% today, and we continue to see Tesla blowing off the top, and that's exactly why I continue to tell you don't bother shorting this stock. If you want to know what shorting Tesla stock feels like, it's the equivalent of taking your money and lighting it on fire with a lighter and just watching it burn in front of your face. It's as fun as long as the fire lasts, and then you realize you don't have any money left and you start to get a lot more sober. Don't short the stock because it's going up on higher volume, and that is the definition of bullish price action. We have a huge amount of buyer volume, and we continue to see Tesla just blowing off the top, basically going into no man's land where I can't even give you accurate technical analysis because I don't know how to analyze a blow off top stock that just continues to go up. It looks like Tesla stock is confused with being SpaceX stock, and on a rocket ride, what goes up doesn't come down, it just goes into orbit. So Tesla stock is looking like a rocket ride straight to space, and my price targets in space are all the way up here at 1240 and then 1412. Whether or not we actually get to those levels without a pullback, I have no idea. But what's more than likely going to happen is we eventually have to see some consolidation so Tesla can start consolidating some of these recent gains. It's definitely going up way too far, way too fast, but obviously that doesn't matter, and it's just defying gravity. So what I more than likely expect to see is Tesla stalling out around 1240 and then eventually putting in another bull flag. We talked about this possibility before, and we'll go over it in the hourly chart because essentially that is what happened. It just happened on smaller time scales. So look for Tesla to start consolidating in the very near future, and I don't necessarily expect to see Tesla just crashing back down. That is still a possibility. I just don't think it's expected to happen because we just see way too many bulls in this stock just dying to buy the dip. It also makes sense in the options market on why a sideways move makes more sense. So just understand, if you're shorting this stock, you're more than likely just going to lose money. So you're much better off just spending it on something more fun, like lighting it on fire and getting a little bit of a show out of it. So now let's jump over to the 1 hour chart, and you can see Tesla did about what we expected, but it just happened on a much faster time frame. We were expecting this bull flag triangle, and we were expecting to see it ping-ponging around before we got the breakout. However, that's not exactly what happened, even though we were close in that prediction, because we got the breakout before we expected it, and we continued to blow off the top. So look for a continuation of this pattern as Tesla consolidates its gains, continues to form triangles, and breaking out to the upside or breaking out to the downside. Either way it breaks out is the direction of the trade you want to take. If it's continuing to break out to the upside, you don't want to try to short this stock just because it's going higher. Remember, if you're following price action, you have to stay objective and you have to leave your bias at the door. Price action breaking out to the upside is always bullish, and that doesn't mean you should be shorting it. Don't short something just because it's going higher, because as you can tell, that strategy just doesn't work. On Apple stock, we were down 0.56% today, and we continue to see Apple cooling down after earnings and still holding up above critical support. Remember, the critical support levels on Apple stock are 148 and our 50 EMA at 146. And so far, if we're looking at the price action, we bounced off critical support and we're back above the other critical support level. We're very close to having the full bull trend, so I do think Apple stock is a buy the dip stock, and I do expect to see Apple stock breaking out and forming a brand new all-time high in the very near future. So you want to buy the dip off 148 and 146, and our resistance levels above will be 151, 157, and the price target's up there at 162. So Apple stock's about to have that full bull trend as soon as tomorrow, and as you can tell, Apple stock is lagging the rest of the market. We see the triple Qs at brand new all-time highs, and we see stocks like Microsoft and Google that already did break out and go to brand new all-time highs. So if you're following price action and you're looking at the broad market, there's no reason to believe that Apple stock is not just lagging behind and it's getting ready to blast out and go to that brand new all-time high. So stay objective, because you can't look at something in a full bull trend and start thinking it's bearish. As long as Apple's above 146, you want to stay on the bull for that price target to break out to a brand new all-time high. If we do break down below 146, look for support at 145 and 142, and below 142, we're very likely going back down to 139 or the gap close at 137. On the financial sector, we still have bullish price action above all the moving averages, and we still have that very strong bull trend. The industrial sector was up 0.28% today with bullish price action, and we still do have that full bull trend. The healthcare sector was down 0.12% today, but we still have bullish price action, and we are developing a lot of bullish trending. The energy sector was up 1.72% today with the price action above all the moving averages, and we still have that very strong bull trend. So jumping back over the S&P 500, you can see that all of the sectors are still bullish, and we continue to see a lot of bullish price action across the board. We're starting to see small caps taking the lead, which is exactly what we expected to see. And a lot of us on the Stocks Channel Discord did really well today because we were positioning for that bullish breakout. We finally got it, and that's why patience pays off, because if you have a strategy and you stick to it, you will see the profits start rolling in. So in this situation, you can't look at these prices and get too overly bullish, because we could be due for a pullback, but don't get bearish just because we start to pull back. There's going to be a ton of bears that start calling the top yet again, saying we topped at 460 just because we get a little bit of a minor pullback. Don't be that guy. Follow the price action and follow the trend, and we are still in a very, very strong bull market that is not just going to roll over and die easily. I can't stress that enough, because a lot of people think the rug's just going to get pulled beneath them and they're going to lose a ton of money because they went into a long trade. That's not how it works. Strong bull markets die very slowly, and they absolutely roast the bears even on the way down, because there will be very strong relief rallies that will be counter trend moves. So stay bullish in this bull market and unsubscribe from fear mongering, because fear mongering is not going to help you be a disciplined trader, and it's not going to help you be profitable. Also, don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and I'm currently running a 50% off promotion code for your first month. If you're interested in joining BANC Trade Alerts, you can find out how to join by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market, and I bring new trade ideas to you weekly. We are absolutely crushing this market on the Stocks Channel Discord, so if you're interested in joining the community, you can find out how to join the Discord server by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.